Yo guys, welcome back to the channel, and in today's video we'll be going through 5 stocks to keep an eye out or potentially buy in the month of October, which starts next week. Before we get the video started, just a quick disclaimer: we're not financial advisors.
Yeah, what he said.
So don't buy a stock because we bought the stock. So obviously we make recommendations, but also do your own research, educate yourself, do your own due diligence before you invest your money into that stocks. So yeah, just make sure to look into the stocks further and don't just buy because we bought it or because we recommended it.
Yeah.
We're just here to educate you, help you out in the stock help you out in the stock market. And yeah, let's just get into the video. Okay, so the first stock we've got on the list is Tesla. So if you watched our last video, we recommended that you buy Tesla at the price which ended at 380, and the day we released that video, the price actually dipped even further to 350, and I think I got I think like 2 shares at 354 and 369. So if you listen to us and you bought a share that day, the stock price is now at 407. So you'd be up by how many percent? Like by a good 5-6%.
$50 a share.
Yeah, so you'd be up right now if you kind of listen to us. So just watch that video. We'll link it up above. I don't know how that's gonna work, but yeah. So yeah, why buy Tesla? Like before, I used to say anything under $400 is a very good price. Right now it's 407, and it's still a very good price to buy Tesla at. The way you have to look at it is the company is gonna keep getting bigger. It's gonna keep growing. So that 407, if you were to buy it, think 1, 2, 3, 5 years time, it's going to be a lot more than that. So you have to think long term, because we're investors, so we invest for growth companies. We think long term, what company is going to make us money long term, because if you're trying to invest for a short term and make quick cash, that's how you lose a lot of money. So you might make money in the moment, but you're also going to lose money faster. So yeah, so I still feel like Tesla is a very good buy at 407. So that's definitely a stock to keep an eye on next week. It might dip, it might go up, but keep an eye on Tesla. Second stock, or the second company we've got, is one of my favorite, Workhorse. So Workhorse right now is trading at 24.83, and at the start of last week it was at $30, but it was one of the companies that was hit when the EV market and the tech market just kind of went down. So what is Workhorse? So Workhorse is a EV company that delivers electric delivery vehicles, and right now they're competing for a USPS contract, which is the United States Postal Service contract, which is worth between $6 to $8 billion. So imagine if they was to get even a proportion of that, even half, 20%, it's gonna go up. Right now I think the market cap is at 2.61 billion. So imagine if they get that USPS contract, which is worth up to 8 billion. It's Workhorse, I feel like, is gonna get a majority of that deal, just because out of all the companies in the running, Workhorse is the only viable company that's likely to get it. So there's 4 companies in the running for that deal. So I think one of them just dropped out. So now that leaves 3 companies. So one is a Chinese company, which I don't feel like America is gonna lean towards a Chinese company. I think they're gonna keep it at home, sort of thing.
Trump hates China. Just remember that. Trump
but then we've got the other one's a company that just joined with Ford. But the issue with that company is that it's not fully electrical. So why go electrical when the car is not fully electrical? And that's where Workhorse comes in, because their vehicle is 100% electrical. And news got released last week actually, where now the range has increased from 100 to 160 mile, which means the trucks or the vans, the delivery vans, can go 160 mile with no charging, which for an EV van, that is amazing. That's basically what world record breaking. But yeah, so Workhorse is doing big things. The past few weeks it's been nothing but good news. So the fact that the stocks even dipped last week, just take it as a sell to buy into it, because last week they just announced they're hiring more people, more engineer, more manufacturer, and you won't hire a lot of people unless you've got a big order coming in, such as the USPS, deal that everyone's hoping that Workhorse does win. So if they was to win this deal, we're looking at a share price of 40, 50, 60, can even touch the 3 figures. So imagine buying it now at 24.83, because I thought even this week it's probably going to shoot back up to 30. So take the advantage now that it's kind of cheap, and just keep eyeing it, because I think we're expecting to know who wins the contract either next week, because I think there was like a 90-day. There was like a 90-day which expires on September the 30th. So we should hopefully find out who won the deal next week. If not, it might be the week after, but no one knows. Whenever the USPS says is when we'll know. Also, we'll keep you updated. And so that's 2 companies so far. So that's Tesla and that's Workhorse. So
so I'll be speaking about Lordstown Motors now, and they're doing a merger with Diamond Peak, ticker symbol DPHC. And Lordstown Motors, they're an electrical vehicles company partially owned by Workhorse, and they recently had a new truck that rolled out with over 40,000 pre-orders. And bear in mind, they were only projected 2,200 sales in 2021. So you can imagine 40,000 pre-orders and counting. That is 1,000% more revenue than they anticipated. When this merger goes through, they're going to have 700 million more to work with as well. And they do have a strong balance sheet to show for it. And the trucks they're releasing is cheaper than the competitors such as Tesla, Ford, and Nikola. Picture in the mud now. Nikola absolutely in the mud. But they do plan to release a wider variety of vehicles, and they're currently trading at $23.89, and that is almost 100% up from the past 3 months when it was trading around $12. But just remember, it was up at 24. It did take a dip, so I feel like this price right here, $23.89, is a discount. It is destined for great things in the future, the next 3, 4, 5 years, and I'll be holding on to Lordstown Motors. I believe they're a very good company. They've got very loyal customers, and just remember, they do focus on fleets, so all these pre-orders, they're unlikely to get returned, because fleets are like a large group of vehicles. The big companies come in saying, oh, can you service hundreds of my vehicles for me? So they're very unlikely to get these returns because they're not working with single customers. So yeah, that is Lordstown Motors for you. As I said, do due diligence before you do put money into a stock. But yeah, I feel like this is a good one to look into, a very good one to look into. So yeah, back to you.
Okay, so the 4th company on the list is, of course, Apple. So so why invest in Apple? So first of all, why not? But let's just get into what Apple is one of those stocks or companies that will keep going up. You're probably watching this on an Apple device.
It's true.
If you're not, I don't believe it, but bear in mind the new iPhones are coming out.
I'm trying to get a MacBook, so you know what I'm saying.
Which should be announced probably next month, October. So they just had a events there, but it was just iPads and a new fitness scheme that was announced. So we're hoping the new iPhone gets announced next month, and obviously we've also got 5G coming out.
Big stuff.
Apple's gonna keep going, keep growing. You might think that it's gotten big enough, but Apple's gonna keep going for the next decade to come. I've not seen a competitor that can compete with Apple. Bear in mind, in terms of market cap, it's at 2 trillion. I can't even say 2, which is the highest in the whole stock market. So Apple's a very, very big company. Right now, it's trading at around about 109, 110. I'm not too sure the exact, but it's around about that. But Apple's one of those low risks, but a lot lower rewards sort of thing. So if you're looking for a safe company, I would suggest Apple.
Yeah.
Something to leave your money in. Maybe leave like 10% of your monthly income in Apple, and next 5 years, 10 years, it will just keep adding, it will keep growing. So Apple is one of those companies that I can leave it, shut my eyes, wake up in 10 years, and I'll know that I've made a return on Apple and I've not lost money. So Apple is a great company to invest to if you're not looking to take major risks and you just want to maybe even test out the stock market. Apple's a great company. You won't lose money. You might not make a lot, but who knows where Apple's going. They can do something that's revolutionary that can next. Apple's going to keep getting bigger and they're going to keep bringing out more services, more products, things that we've not even thought about. But yeah, so that's the fourth company. And for your fifth and final company is
XL Fleet, and they're going to be doing a merger with this SPAC Pivotal Investment Corp 2, ticker symbol PIC, and they're focused on the transformation of gas powered trucks and diesel powered trucks into electrical trucks. And with XL Fleet, they have maintained a complementary relationship with big companies such as Ford, Chevrolet, General Motors, and they also have powertrains which help the electrification of the vehicles faster. And this is how they've added value to the relationship. And with XL Fleet, they've already deployed 3,000 vehicles already, and they've also got a pipeline business on the line. So they've already made sales of 220 million. So they're already ahead of the game when compared to Workhorse, Hyliion, Nikola, Lordstown Motors. So yeah, and it's currently trading at £11.95, and I feel like this is a very low risk investment. So yeah, I feel like right now is a buy, especially it being down from £13.50, which was an all-time high. So yeah, I feel like it has room to run to around $20 in the future, but as I say, do your own research, make sure you're comfortable investing in this company. But I will be putting more into this company as I do feel like it does have room to run. And I'll be holding it for around 4 months if they don't release any more news that is special or that is gonna prompt its growth. So yeah, that is XL Fleet for you. And yeah, they're also gonna expand outside North America, which is also big. And the merger will give them 350 million to rapidly produce. So yeah, that's about it for XL Fleet.
And I believe that's the end
of the video.
Of the video. So don't forget to give it a thumbs up and don't forget to
subscribe and hit that noti bell.
Yeah.
More buying opportunities for you.
So thanks for watching.